Hey, what's up, man? What's up, my friend? Yeah, let me dive into the topic of today. you know, the guy is a guy who asked me a question. Not really like he asked me a question, but the guy complained a little bit that he cannot even make profit with the moving average. So I think a lot of people might not even understand how to be profitable with moving average. Well, there are different kind of moving average, and I've been using moving average since I've been trading. So I think I want to correct the guy based on how he complained to me that he doesn't know how to use moving average and he's not been profitable with them. Okay, let me explain to you everything I've been talking about moving averages from all my videos. I talk about 900 of recently. Yeah, I talk about 200, which I've always been talking about. I talk about 100, which I've always been talking about. Okay, and I talk about the price. And if you watch my video so well, you will see me talk about, you will hear me talk about Bollinger Bands. Okay, so now how do you become profitable with moving average? Okay, before I talk to you about how you become profitable with moving average, I want to tell you one thing first. Disadvantage of moving average. Okay, you see, with moving average, the tendency that you are going to miss your entry is 90%. This is the first thing you want to bear in your mind, that when you are using moving average, okay, there is every tendency that you're gonna miss your entry. This is 90%. Okay, but the advantage of moving average is that even if you miss your entry, okay, you have a lot of entry points on that moving average. Okay, I do use this moving average 200. Okay, moving average 200, like I said, when the price, and I don't mean the candlesticks. Okay, when I go watch my video, you hear me talk this many times. I don't mean the candlesticks. That's not the price. The price I'm talking about is the moving average 9. Okay, which is this the middle band, the central band of this Bollinger Band. Okay, I made my moving average 9. This is Bollinger Band 20, period of 20 Bollinger Band. Okay, and the middle band is period of 20. Okay, but I have a yellow band around it, just like this, moving average 9. So don't worry about that. But moving average 9, moving average 20, they are same. Okay, Bollinger Band period 20 with the central band 20. Okay, so everything is okay, it's same. You don't need to worry about the moving average. But I must be specific about this moving average 200, which is this yellow one I'm touching. Okay, this moving average 200, okay, it's for long-term trading. Okay, it's for long-term trading. It's not for short-term. It's for long-term trading. Okay, and this moving average 900 is for long-term trading. Okay, so what you're seeing here is that I talked this many times, that whenever the price, which is this moving average 20, okay, or the central band of this Bollinger Band cross the moving average 200, which means the candlesticks here is above the moving average 200. Okay, I think this is the time we are supposed to be buying in the market. And whenever we are below the moving average 200 here, okay, whenever the candlesticks or this moving average 9 or the moving average 20, the central band of Bollinger Band, is below this moving average 200, I think we are supposed to be selling. All right, good. So before I go further now, let's talk about how do you now become profitable with this moving average 200 and all this moving average I've been talking about. Okay, let's say supposing you miss the cross, of this moving average 20 crossing over the moving average 200, this 20 crossing over this 200, this yellow. Supposing you missed it, okay, this is where a lot of people will say, okay, I miss my entry, then I need to go and wait, I need to go and sit down, I need not to do anything at all. You see, let me talk to you about something they call pivot. Okay, pivot, the way some British people will call it pivot. Okay, but let me call it in my own language, pivot point. Okay, pivot point. Okay, good. When you know how to draw support and resistance line, okay, I mean, you can use it as your pivot point, but I don't want to talk about that. Okay, I want to face this Bollinger Band. Look at my Bollinger Band. This is Bollinger Band period 20. Okay, now let me tell you, even if you miss your entry from this crossover of this period 20 moving average crossing this 200 moving average, if you missed it, let's say you miss it, all right, you miss it, then you have to take note of one thing. There's one thing you have to take note of. As long as we are above, the price is above the moving average 200, which is this yellow line of mine, definitely you have to get opportunity to buy into the market. Okay, so the point is when do you actually buy? That is the point we want to talk about here. Okay, so this is exactly where Bollinger Band comes in. Okay, this is exactly where Bollinger Band comes in. Okay, so how do we now make use of this Bollinger Band? Okay, I'm using this Bollinger Band period 20. Okay, so even if I miss this crossover of this period 20 crossing the 200, then I don't need to go and sleep. I don't need to hit my head on the wall that hey, I missed my crossover. No, I don't need to do those things. Okay, this is the reason why this Bollinger Band is on my chart here. Okay, now let me tell you something. You see, when you're looking at the middle band of this Bollinger Band period 20, okay, you will understand that when price, which is this candlesticks now, oscillates around it, separate from it, and comes back below it, below this central band of this Bollinger Band. This is the central band I'm touching here. When the price comes below it this way, when the candlesticks comes below it this way, this is your entry, because you want to buy above the moving average 200. So when this Bollinger Band is also above the 200, then we are up, we should be buying. So you buy when the price comes below the middle band of this Bollinger Band. This is where you buy, and now you buy. Okay, then look at what happens. The price shoot up, okay, shoot up, and still came down below the band. Okay, this is another buying opportunity. Okay, some of you might say, hey, okay, I bought here, but now look at what happened. It's coming against me. Okay, it's not coming against you. It's not coming against you. Okay, because if you understand that whenever we are above the moving average 200, we should be buying, and we should be up. Okay, and then what is the characteristics of being above the moving average 200? So definitely we should be breaking the top. Okay, we should be breaking the top. Look at one top here, broken here. This is another top. Okay, broke it here. This is another top. It's set, and now something is gonna happen here where we're gonna pull over and break all this top. All right, now let me tell you something. when this candlesticks is oscillating around or relating with the central band of this Bollinger Band 20, this is another opportunity to buy into this market. Okay, because what it's talking about is that we're gonna break this top here. We're gonna break it. We are gonna break it. And see, we broke it. We broke it. Price went and came down to relate with this same middle Bollinger Band. Okay, and you will see what happened later, that the price will shoot up and separate from this middle Bollinger Band. So what is the point here, and how to be profitable with all this kind of stuff? Okay, how to be profitable is that, you see, you know what is going on, that actually we are above the 200 and we are up. We should be buying, right? You know, we should be breaking the tops. All right, good. And you know that this kind of movement might continue for a long period of time. Okay, so what you want to do is that you understand the fact that whenever there's going to be a major retracement, okay, that major retracement will end by touching the moving average 200. That is the major retracement. But it doesn't happen all the time. Okay, it only happens when the trend is about to end, because when Bollinger Band pull back and come touch this 200, definitely it's gonna reverse. That is a sign that for touching the moving average 200, definitely the trend is about to end. And what happens next is that we should be expecting another crossover, forever touching it once. So that doesn't happen immediately. Okay, it happens over a long period of time. It doesn't happen immediately. Okay, so in order not to be afraid or panic, okay, with this kind of moves, okay, you want to make sure that your stop loss is below the moving average 200, because eventually the moving average 200 will climb and, you know, get you into profit. So definitely another point is that you should not trade a big lot. Okay, you are not supposed to trade a big lot size. Okay, you have to know how to split your trade into pieces. Let's say today you want to trade like maybe 5 lots. Maybe you're the type who take like maybe 2 lots in a day. So the 2 lots, you don't want to take 2 lots at a time. Maybe you want to split it like 0.50 and you take only 4. 1, 2, 3, 4. 0.50, 0.50, 0.50, 0.50. That's 2 lots. But you just split them at different entry points. Okay, different entry points when the price is coming below this central band of Bollinger Band. You pick them up there. You pick them there, because you're gonna be profitable, and that is how to be profitable with the moving average. Okay, especially when you're using a long-term moving average like moving average 200. If you're the type using that moving average 9 causing the moving average 20, okay, that's still for the short period, short-term trades. Okay, and that has its own disadvantage also, but the moving average 200 help to protect your stop loss also. Okay, but the main secret behind it is that you don't need to trade like a big lot size. So the second point is that when you're looking at my chart, okay, and I'm looking at the fact that I am up with the price is above this moving average 200, so I know that, okay, and for the price to cross my moving average 900, I think the bigger chart is they are changing to up. trend. Okay, the trend is changing to up. So how do I know all this? Okay, this is the reason why this moving average happens to be on my chart. Okay, when my price here cross the moving average 100, I understand the fact that okay, 30 minutes chart has changed. When it's crossing this 200, I know that okay, 1 hour chart is changing. And when it crosses this 900, I know that okay, 4 hours chart and daily, they are preparing to make a change. Okay, but if you are confused about this, because this took me a long time to understand also, look at what I'm touching here. This is CCI. Okay, this is CCI, and this CCI, look at, it's set to be like CCI 200. Okay, we have this kind of things also like MACD. Okay, MACD all depend on the settings. Okay, but this setting you see here is CCI 200 period. Okay, based on this 200 period moving average. When you see this CCI above this zero, it's telling you what? That we, or the price, is above this 200 moving average. And look at here, when this CCI is below this zero, it's telling us that the price has crossed below this 200. So I'm not the type of trader who split chart on my screen, because I cannot even see the things I'm trading. When I split the chart, I can't even see those. I can't see properly those things. When I split 15-minute chart, 30-minute chart, 1 hour chart, 4 hour chart, daily chart, then I'm having like 6 pieces of chart on my screen. I'm not that kind of traders who do that. This is the reason why I put all this moving average on my chart, in order to guide me through, because I have to know what is going on around the bigger chart. Okay, so with all these things on my chart now, let me know that the bigger charts are changing. They are changing to uptrend. Okay, you want to use things like CCI alongside with it. If you cannot read the moving average by itself, then you need something like MACD or CCI. Okay, to me, look at, if I take CCI down now, without CCI, I still know how to be profitable with these moving averages, because it's been a long time I've been using them. Okay, this moving average in conjunction with this Bollinger Band. So this is not too difficult for you to find. Okay, entry. To me, when I take a look at CCI, where is my entry on this CCI? Okay, this is my first entry. Okay, I understand that CCI is above zero, so definitely I should be buying into the market. So where will I buy? Buy the dip. This is the dip. This is one dip. This is the dip. This is the time to buy, because when you see the dip, the price will rise again. So you want to be there before the price ever rise. This is another one here when it's just starting. Okay, but I don't want to talk too much about this, but this is why I base your concentration on this Bollinger Band, that even if you miss your entry, your crossover, but look at, what about this Bollinger Band? When price, these candlesticks comes below the central band of Bollinger Band, these are your entry. But you need to know what is going on the bigger trend. You need to know the trend direction. Look at, let me show you something that is also showing me the trend direction. Okay, look at this. Okay, because from this point here, I can see the bigger chart, what is going on with the bigger chart. Daily is up, 4 hours up, 60 minutes it's up. The smaller one, 30 minutes, 15, they are up. Only 5 minutes is retracing. This is a retracement. And what is coming into my mind, that 5 minutes is retracing, that is telling me that my entry to buy into the market is coming again. If I don't use this also, I still know how to get the entry. And this is only one point of how you can be profitable with the moving averages, okay, in conjunction with the Bollinger Band, okay. Price have crossed the moving average 200 and price have gone. So that means what? Because I understand the feeling of the guy who said he's not making profit. Because I understand that, okay, he followed the moving average crossover, and that is the only one trade he picked up. So that is the reason why a lot of people say we are making profit with this moving average crossover. But still, when you understand properly what is going on around the moving average, then you will know how to be profitable. Like, to make it simple, I have to put the Bollinger Band because of this video, okay, because without Bollinger Band I still know what I'm looking for. Look at, when this candlestick comes below the central band of this Bollinger Band, this is your entry to buy into this market. Because why should you buy? Because you are above the 200. That is why you should think of buy when the price comes below the central band of Bollinger Band. Anyway, I think this information is cool and it's okay for you guys, and I hope you're gonna learn from this, because I know that some people have this problem. Not only the guy who's complaining, I know a lot of people having this problem, and this the problem I had a long time ago also, you know. But you know, when we find a way to solve our problems, I think that is the best thing we can do for ourselves. So thank you for watching, and you understand, thank you for watching. I hope you learn a lot from this. Bye bye until I make my next video. Thank you.